Welcome back. You're watching The Money Show on ET. Now it's time for our Spend with TMS segment. Well, did you know that a majority of Indians have taken a personal loan during a year ravaged with COVID, primarily for their own business? This is something that India Lens' latest report has spoken about. We have with us Gaurav Chopra, co-founder of India Lens, joining in on the show. Hi Gaurav, good evening and thank you for joining in. So share with us, to start with, and enlighten our viewers of what have been your key findings from this survey.
So basically, we've gone through a lot during the COVID time, and same time last year, there was uncertainty on both the demand and supply of credit. We saw most of the lenders pausing fresh disbursements for loans. At the same time, we saw that many borrowers were also refraining from taking new loans as their demand had also fallen, given that they were not able to go out anywhere. But now, 12 months hence, what we've seen is that the loan demand is back up. Over the last 7 to 8 months, we've seen a month-on-month growth in the demand and supply of loans. On the demand side, we did a small survey, combined that with the loan dispersal that we've actually done, and we see that pre-COVID to now, there's a big shift in people taking loans to set up their own businesses. And these are not businesses, which would require a lot of capital, but a lot of people trying to, get into the entrepreneurial mode, setting up their own shops, or taking capital to expand their existing businesses. So that is a big insight that's come out. That is resulting in nearly 25% of all new loan requests that are coming in. So that was one big insight. And then besides that, the same old reasons, which is buying gadgets, that was around 15% of our loan requests. We had 11% people wanting loans for household expenses. This was more recently, this has been renovations, paint work, which people had stopped doing during the lockdown period. And also 20% odd people are taking loans for upgrading their vehicles. So we've seen people who were earlier using public transport or shared mobility have started opting for two-wheelers. People who earlier had two-wheelers are now looking for four-wheelers, so on and so forth.
Okay, interesting. Gaurav, when you say loans for business, personal loans for business, was it usually by businessmen to keep their business afloat or to start a new one?
So there's a combination of the two, right? So there is definitely, there was a lack of working capital that had come in due to the COVID restrictions, and people did not have cash flows coming in. And we saw about half of these loan requests from the ones that wanted it for their own businesses was coming for that reason. Interestingly, a decent amount of, or a lot of people also wanted to start up their own businesses.
Understood. Gaurav, do you think that compared to the last year, people have been resorting more to personal loans?
So we've actually seen a shift in the personal loan demand, and I'll explain that in more detail. So, pre-COVID, we were seeing a lot of loans coming for reasons such as traveling abroad, a wedding or an engagement in the family, sending their children out for education, both higher education in India and abroad, and things such as paying down payments for a new house or paying a lock-in for their new home rental. So that demand has now shifted because, to be honest, over the last 7-8 months, these activities have really stopped. Weddings are happening at a lower scale. Travel, at least the international one, has not really opened up, and education abroad is also getting delayed, or people are delaying their sending the children abroad. And the shift has now resulted in people taking loans either to repay off existing debt obligations. As we all know, the interest rates on credit cards in India are very high. So people come to us, ask for a loan which could be at times 1/3 that they're paying on a credit card. So that demand has gone up. Similarly, like I mentioned, people are setting up their own ventures, setting up their own startups, and they're taking loans for that. And as the economy has started opening, the home renovation part has started increasing as well.
And what do you think is egging people to take more personal loans? Do you think it's also got to do with the low interest rates?
Yeah, so I don't think it is the interest rates that is driving this. To be very honest, when it comes to unsecured loans, interest rates haven't really fallen. We've seen a fall happening in home loans, but when it comes to personal loans, barring for a few super prime segments, which is people who are earning above $1.5 lakh a month and who are working in the top 100 odd companies, only those have seen a fall in interest rates. But otherwise, interest rates have either gone up for unsecured lending or remained the same. The reason that I feel the shift has come in specifically in tier 2 cities is because of the ease of the lending process now. Even 2 years back, to take a small loan of 50,000 rupees, one had to, meet a person or meet a banker in person, had to give his KYC in person, had to, sign post-dated checks and give it. Now, all of this has become digital. So it is literally a matter of minutes that, you can come to, let's say, our app, put in some, basic details about yourself, a credit check gets done, post that you can validate your banking, you can do your KYC through video KYC, and you can essentially, sign the loan agreement on your app or computer itself. So this convenience of taking a loan has led to tier 2 cities or people from tier 2 cities also being a part of the digital loan journey.
Okay, well, Gaurav, with that, we're out of time, so we're going to wrap it up. Thanks so much once again for joining us today on The Money Show. And with that, we're out of time, so we're going to wrap it up on the show as well. Thanks for watching.